Welcome to the Business Outlook Survey press conference call. My name is Catherine Dibbling, Senior Media Representative with the Federal Reserve Bank of Philadelphia's Public Affairs Department. And with me today is Mike Treving, Senior Economic Analyst in the bank's Research Department. Today we will take questions about what our manufacturers had to say about business activity in December. But first, Mike will give a brief summary. Mike?
Thanks, Kathy. Our monthly manufacturing survey respondents tell us that regional manufacturing activity is continuing to grow in December. The survey's diffusion indexes for general activity, new order shipments, and employment were all positive this month and reflect modest growth rates. The survey's price measures continued to show rising input prices, and more firms reported increases in their own manufactured goods than reported declines this month. The broadest indicators of future activity showed continuing improvement this month, suggesting that firms are more confident about growth over the next 6 months. And our special questions this month address the firms' expectations for cost increases next year. We asked for their estimates of cost increases for wages and benefits and various non-labor costs, and healthcare costs continue to be in the lead of other categories of expenses, with those costs rising at a much more rapid pace than other labor and non-labor costs.
Questions? Kathleen Madigan, Dow Jones.
Yeah, let's, if we can start with the special questions.
Sure.
Do you guys do this every December, so I could go back and look at what things were anticipated for 2011?
Right. We've run this, I believe, 5 or 6 years in a row now.
Mm-hmm.
And as I mentioned in the statement, once again, healthcare costs was the highest expected increase year over year. 2012 expected over this year came in about 7.3% this year as an expectation for next year, compared to wages of just a little over 2% increase. And the other categories of expenses were much less. Energy at 1.8, raw materials at 3.3, and intermediate goods at 2.4. If you compare that with last year, in particular the expectations for energy cost increases are less this year, but some of the other categories are comparable to expectations for costs when we asked this question in December of last year.
Mm-hmm. Mm-hmm. Yeah, and coincidence or not, the New York Fed asked the same supplemental questions in their report released today, and it does show the same pattern as health benefits being the biggest increase, and wages pretty much around 2%.
Right. Yeah, I mean the surveys are very similar in the basic questions that we ask every month about activity month to month, but our special questions vary a little bit, and they asked essentially the same questions, but in a slightly different format. But it did look like the averages came about to what we were collecting.
Now, related to that, with the prices received, I mean, that was a big jump, and I'm not sure if the 12 is the highest since what month, but it would seem as though Philly manufacturers are trying to pass along some of these higher costs that we've seen in the last few months.
Right. We saw a little bit of an increase in both prices paid and prices received this month. A rise in the share of firms reporting increases from 15% last month to 22% this month on the prices received side. That's the highest diffusion index, looks like, since May of last year.
Oh, okay.
The overall diffusion indexes are still lower than they have been in earlier last year, for example, but they have moved up a little bit the last few months.
Mm-hmm. And looking at the still high level of expectations, reading the comments, and is there a specific reason why people are more upbeat about the future? Is it just because we're getting into a new year, or are they seeing something in the pipeline?
Well, we seasonally adjust even the expectations, so we don't think it's the end-of-year effect, although there obviously is a slowdown at the end of the year. December tends to be a slower month for production and all kinds of activities. But we have seen that 6-month forecast improve a little bit every month for the last 4 months. And it does reflect, I think, the overall comments we're receiving, that they're cautiously optimistic about next year. That's much different than the readings we were getting, for example, this summer, where expectations and the readings that we saw were much lower also. So we're starting out the next year, I think, on better footings than maybe 6 months ago.
Okay, that's it for me.
Mm-hmm.
Well, thank you. We'll talk to you again next month.
Okay, bye-bye.
Bye. You've just been listening to December's Business Outlook Survey press conference call. My name is Catherine Dibling, Senior Media Representative with the Federal Reserve Bank of Philadelphia. And with me today is Mike Trebning, Senior Economic Analyst. Just a note, the survey's annual historical revisions will be released at 10 a.m. on Thursday, January 12th, and that's 2012. In addition, the first survey of the year in 2012 will be released at 10 a.m. on Thursday, January 19th.